Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about BJ ENT Water, interim report. Beijing Enterprises Water Group Limited provides a diverse range of businesses and services across various sectors. The company's key offerings include water treatment services, sewage and reclaimed water treatment plant construction and operation, seawater desalination, plants construction services for renovation projects in multiple countries, distribution and sale of piped water in several regions, technical and consultancy services, sale of machinery related to sewage treatment, licensing of technical know-how for sewage treatment, urban services, including hazardous waste treatment, provision of urban environmental governance services, construction services, waste electrical and electronic equipment treatment services, sale of recycling and reuse products. The stock price of Beijing Enterprises Water Group Limited has increased by 8.85% over the past year due to several key factors. One major contributor is the company's consistent and increasing dividend payouts, which have exceeded expectations and provided a stable income for investors. Positive analyst sentiment and target price adjustments from firms such as CD Research and Giant International have also contributed to the stock price increase. Additionally, anticipation of water price reforms in Guangzhou has been viewed positively, benefiting water supply operators like Beijing Enterprises Water Group. The company's steady operations and effective cost control measures have further contributed to a more stable outlook, despite some revenue declines. The primary drivers of revenue growth or decline are largely influenced by the company's performance in various sectors. On one hand, a significant decrease in construction services for bought water projects, -92%, and technical services and sale of machineries, -108.7%, have led to revenue decline. Additionally, a complete halt in water distribution services, -100%, has also contributed to this trend. On the other hand, revenue growth is driven by an increase in interest income, +177.4%, construction services for comprehensive renovation projects, +80.3%, and water treatment services, +53.9%. These sectors have shown substantial growth, offsetting the decline in other areas. Overall, the company's revenue performance is heavily dependent on its ability to balance these competing factors. Net income and profit margins. A decline in performance. The financial performance of the company has experienced a decline in net income and profit margins. Net income decreased by 20% compared to the previous period, with a significant drop from RMB 52.3 million to RMB 13.5 million due to an impairment loss on non-current assets. Profit margins also declined, decreasing by 12.5%. However, there were some exceptions where gross profit margins increased. The proportion of revenue contribution from water treatment services with higher gross margin led to a rise in gross profit margin from 38% to 40%. Despite this increase, other services experienced a decline in gross margins. Sewage and reclaimed water treatment services saw an improvement in China but remained low overseas. Water distribution services decreased in both Chinese mainland and overseas markets. Construction services for comprehensive renovation projects and construction of bought water projects also declined. The technical services and sale of machinery segment was the only one to see an increase in gross margin, rising to 34%. Urban resources services maintained their previous level of 20% gross margin. The decline in net income and profit margins can be attributed to various factors, including impairment losses on non-current assets and decreased performance in certain segments. The company is generating positive operating cash flow, as evident from the significant increase in net cash from operating activities. In the 6 months ending June 30, 2025, the company recorded a substantial RMB 1,939,453 in net cash from operating activities, compared to RMB 251,895 in the same period of the previous year. This indicates a notable improvement in the company's ability to generate cash from its core operations, suggesting a strong financial position and potential for future growth. The company's debt level has undergone significant changes in the past period. While total borrowings decreased by RMB 299.8 million, corporate bonds increased by RMB 1,696.4 million. Non-current liabilities also saw an increase, with bank and other borrowings rising by RMB 1,351,892 and corporate bonds increasing by RMB 696,843. In terms of interest expenses, there has been a notable decrease. Finance costs/interest expenses dropped by 31% compared to the previous period, while interest paid decreased by RMB 524,335. The total interest expense also saw a decline, from RMB 1,639,053 in 2024 to RMB 1,204,398 in 2025. The company's financial performance reveals a mixed picture across different business segments. On the positive side, sewage and reclaimed water treatment services, water consultancy services, and urban resources services have performed well. These areas have likely benefited from increasing demand for sustainable and efficient water management solutions. In contrast, technical and water treatment consultancy services, as well as technical and water treatment machinery sales services, have struggled. This may be due to factors such as decreased demand or increased competition in these markets. To improve overall performance, the company should focus on strengthening its strong segments while addressing the challenges faced by its underperforming areas. Management's outlook on company strategy. The company's management has provided insight into their future plans and priorities. Notably, they have decided to extend the share award scheme for an additional 5 years, demonstrating a commitment to employee retention and motivation. Additionally, they will continue to closely monitor and manage foreign exchange exposure, indicating a proactive approach to mitigating potential risks and ensuring financial stability. These strategic decisions reflect the company's focus on long-term growth and sustainability. There were no significant acquisitions or divestitures made by the company in the given period. This indicates a stable financial strategy with minimal changes to their assets and investments. The company has a history of paying dividends to its shareholders, demonstrating a commitment to returning value to its investors. Specifically, the company declared and paid interim and final cash dividends in the amounts of HK 7.35 cents and H 9.1 cents per share respectively. This indicates that the company prioritizes dividend payments as part of its financial strategy. That concludes the financial summary for BJ ENT Water. Feel free to comment below, and I will be happy to answer them when possible.